We're half an hour away from the opening bells. Hong Kong, Shenzhen, and in Shanghai. You're watching the China Show. I'm David Ingles with Yvonne.
Our top stories this morning: Asian stocks draw falling declines on Wall Street, triggered by a sell-off in tech stocks. Apple suppliers in the region in focus, also falling on slumping iPhone sales in China.
Investors seeking more details on Beijing's plan to support the economy and its markets. Top officials from the central bank, the securities regulator, and other key ministries are set to hold a briefing today.
Plus, it could be Nikki Haley's last big chance to gain ground on Donald Trump in the Republican presidential race, with Super Tuesday primaries in 15 states. All right, it was a quiet day when it comes to the markets here today, where of course, we're still digesting day 2 of the MPC. So far, Wall Street banks still a bit skeptical about that ambitious 5% or around 5% growth target and how it's going to be delivered, right? So A50 futures are certainly in the red here this morning. We're watching overall. Asia stocks are also on the back foot here. We have that Jay Powell testimony on Thursday. You have Super Tuesday coming through here, so not a whole lot of conviction out there, Dave.
Yeah, we're waiting for more details on many things, right? So Jay Powell is number one. Number two is we have this massive, I would call it the Avengers of the economy in China, the who's who, the ministry. And read about all of those departments, bottom of your screens: the central bank, the securities regulator, the finance ministry, the Ministry of Commerce, the economic planner. It's a joint briefing later today. More a preview of this in just a moment. Drop, of course, 1.5% overnight. The A50 futures, as Yvonne is pointing out, some weakness coming through there.
Yeah, so the headline seems to be that it's a growth target without a plan. And maybe that means more volatility in Chinese stocks. That's according to Morgan Stanley's Laura Wang here this morning. So we are slightly on the back foot here when it comes to futures. 232 from your CGB. This world-beating rally continues for another day. And 721.30. It's been pretty stable, though, for the currency. And we're also watching those Asia Apple suppliers. So we certainly saw what was happening in the South Korea session and what we're seeing so far. We'll see if there's more fallout on the back of our story here, talking a little bit more about that drop in Apple China sales. This is according to, of course, that report, 24% plunge. And really just goes to show the emergence of Huawei seems to be really showing here in the China market. TSMC down about 1.5%.
There we go. At the opening bell, that's 6 weeks into 2024. The data from that specific report. In fact, what we're watching in China today, so Apple suppliers one. We talk about this press briefing number 2. The tech sell-off where you had the Nasdaq falling 1.6%, S&P down 1. HS Tech Index actually got an absolute poleaxing on Tuesday. Downward drift there. There's a support level on the MSCI China. Yes, we're back to that level, the 50-day moving averages. And we'll talk more about these the earnings theme today. JD.com comes out later today, and we'll unpack the earnings coming out of NEO, which came out past tense out of NEO yesterday. There we go.
Don't forget, we're still checking crypto stocks. We're still checking gold stocks, just given they did both hit those all-time highs. We're seeing a bit of a retreat here early on in the session as well here in Asia. But let's get to Stephen Engle, our chief North Asia correspondent. He's still in Beijing for us and joins us now on day 2 of the MPC. And Steve, it seems like what disappointed the markets in some way and economists was that this whole push for supply side reforms. We didn't see more of this whole domestic demand and trying to boost consumption in some ways. And this brings us to that new buzzword in China, new productive forces.
Yeah, that's right. Look, we're all being Wednesday morning quarterbacks right now after reading through, of course, the work report, the game plan, if you will, from Li Qiang yesterday, promising to deliver around 5% GDP growth, the same target as the year before. But we all know the defense is pretty tough against the economy right now because of the economic headwinds, whether it's entrenched deflation, property turmoil. We've run through all the issues that are facing China. So they're going to have a hard time getting from point A to point B and delivering that because, let's face it, Li Qiang did not deliver any specific plans. He talked about they need stimulus and support from all fronts, but never laid out any specifics on how they're going to do that. Fiscally, that's the old playbook, right? Sorry, I'm using a lot of sports metaphors today, but it's really apt because the old playbook was to throw everything fiscally at a slowing economy. But Xi Jinping doesn't want to do that. He doesn't want to exacerbate the debt burdens. He wants to de-risk and de-leverage, obviously, with the proper property woes and the fiscal troubles at the provincial level. But again, we hope we get some sort of more concrete guidance, perhaps from Pan Gongsheng later today, the PBOC governor, if there could be some more monetary support. We've already had that cut, of course, in the LPR, the loan prime rate, the 5-year tied to mortgages. Let's see if there's any more guidance. We'll talk about that in just a second. But as far as what Xi Jinping is talking about, he met yesterday with delegates from Jiangsu province. And anybody who knows Jiangsu province in the eastern seaboard of China, it is a private sector powerhouse. And he was essentially telling the delegates from Jiangsu is to deliver growth not just from traditional industries, which can create bubbles, but find new ways and new innovative ways based on local resources to drive what you said, new productive forces. It's going to be a new buzzword coming from Xi Jinping.
Well, Steve, you alluded to this, the press briefing that's taking place later today. It's certainly for markets something to certainly look ahead to. The question there is, should markets hope?
Yes, well, hope is a very difficult thing to pin a plan on, right? Because, again, we hope that Li Qiang would spell out some policy directives a little bit more concretely, but he did not. So, and he's not going to have his press conference, by the way, on Monday when the NBC closes, so we can't ask these questions. Now, hopefully, I've been to many of these PBOC pressers. They do take questions. So perhaps we can get a direct question to Pan Gongsheng of the PBOC, to Wu Qing, the new securities regulator. That will be very interesting, obviously. What further steps potentially can come down to help support the stock market? We already seen the national team move in through February, and it propped up local equities. But again, you have the finance minister, you have the commerce minister, you have the NDRC, that's the top planning body. So it's a big gathering of top policymakers and regulators in one room. So yeah, 3 o'clock today, local time, could be an interesting or not so interesting if they don't say anything event.
Yep, we'll look ahead to that. Steve, thank you so much. Stephen Engle, our Chief North Asia Correspondent in Beijing for us. Just ahead here in shows, we'll talk all things markets. Were there any key takeaways, anything actionable from what was announced yesterday? We're sticking to China and that theme. Lazard's Ronald will be joining us next, counting down to the open of trade in Shanghai, in Shenzhen, and here in Hong Kong. Futures are pointing lower. The currency is weaker, and yields cannot seem to find a floor in the CGB market. We're closing in on 2.3% on the 10-year. This is the China Show. Good morning. Good morning. Welcome back to shows. You're watching the China Show, by the way, just in case, and hope you're all well. We'll get to the breaking news out of the U.S. in just a moment. A glance at futures right now. Weakness ahead of the open, 20 minutes away. Breaking news here.
Yep. So we're focusing on Super Tuesday already underway. So what we're hearing is that the former president, Donald Trump, getting closer to clinching that Republican nomination with North Carolina, Virginia, and now Tennessee added to those wins. This is according to multiple networks that we've been tracking here this morning. So what does this mean? Is this the end of the road for Nikki Haley? Certainly that is one that we're watching out for here as we count down to more coverage of Super Tuesday. Biden also looks more likely is going to be maybe that Trump and Biden rematch, Dave. Yeah,
there we go. Stay tuned, by the way, for our special coverage of Super Tuesday, top of the next hour. In the meantime, let's pivot back to the Asia Pacific here in China. It is, of course, the week of the two sessions, the NPC, the work report, the disappointment across these markets, the support which came through in the onshore markets, maybe to stabilize that specific market, although lots to unpack as far as China goes. Joining us here in set, Ronald, Chief Market Strategist at Lazard. It's nice to see you, and good morning. I mean, certainly disappointment, is it? I think an apt way to describe market reaction so far to what you've heard. Are you disappointed, or are you satisfied with what you've heard?
I think it's fair to say basically what was delivered was in line with expectations, but expectations were really hoping for something better. It's almost like street consensus earnings and then the whisper. The whisper, I think, was people were hoping we would get a more substantive announcement out of the NPC. And I guess what's really bothersome to many investors is there doesn't seem to be a sense of urgency to really resolve the economic sluggishness. And in particular, consumption has been very weak, and I think that's largely driven by consumer confidence. which is driven by housing industry woes.
So as much as they're focusing on, new productive forces, these new growth drivers, that's not what the market wants. We want actually maybe direct cash into consumers' hands at this point to really kind of stoke this market again.
I agree. And if you actually read through the speech from yesterday, the premier specifically mentioned that they're not basically handing out money and they're not unshackling themselves vis-a-vis kind of a more austere approach. And I think, what's worrisome is you already have an overcapacity in many Chinese industries. It seems the government is aiming for even more productive capacity when you need more consumption, not more supply. So it is a worry.
What's the appropriate exposure now? We're 10% into this Chinese equity rally. So at this point in the rally, where do I want to add, reduce?
Yeah, this is a tough one. I don't think this is an easy call where you say from the top down, now is when you buy China. But when I look at China from an economic perspective, I think over the next 2 to 3 years, it's going to be a muddling through process.
Okay.
I think the housing issues are going to take a long time to resolve. Home prices across China are now down over 25% in many of the cities, Tier 1, Tier 2, and even more in Tier 3 cities. Given that the median household in China has over 60% of their assets in their house, it's going to take a long time to rebuild that confidence. So the economic picture is not good.
Yeah.
Having said that, sentiment from investors is so negative, and the equity market's trading at 8.5 times forward earnings. I do think China could be one of the best performing equity markets as a trade over the next 12 to 18 months. So to me, the best way to engage China is allocating money to a global emerging market strategy and letting your manager find the individual securities that get so inexpensive they just have to be bought. And that's across a range of sectors. So that's a long way to say.
Yeah.
I think upping your allocation to China probably makes sense now, but it's a rent, don't own.
Oh, okay.
Yeah. What are some of the? You've been around the region. You've been talking to a lot of clients. What are some of the takeaways that there are in terms of questions asking you? Right? Have we seen actually all these bad news priced in? Is one thing, but are they looking at more interest in back to this market or not?
Well, the most common question I've gotten traveling in Europe, the U.S., and Asia Pacific year to date is the U.S. election.
Okay.
Put that aside. The next most common question is probably, is China investable?
Yeah.
And I've had a lot of clients say, my solution to China is I do EMX China. And other clients basically saying, I get that it's cheap, it's just too hard to do because there's this regulatory uncertainty in China. But then if you look at even today on the Bloomberg terminal, there's an article about legislation in the U.S. that's bipartisan to force ByteDance to sell TikTok.
Yeah.
So there's a fear on the U.S. side that we not only have to worry about Chinese regulation, but we have to worry about what U.S. regulations might be and what that might do to the value of our investments. So it's a big challenge. I just keep reminding people this is an economy that even in a sluggish period is probably going to grow 3 to 4% in real terms, well ahead of any developed market. And that there are opportunities when valuations are overdone on the downside. This is how you make money.
Right. And what's the reception to that pushback from you?
It's not as negative as I might have thought. I think people are warming up. And by the way, as you mentioned, when you get a 10% rally in a market, people get more interested because they're largely underexposed. And so I think for a lot of people, the good news for many of those investors is China's 30% of EM, so it's a pretty small part of your global benchmark, so it doesn't hurt too much. But they've already lived through this with Japan.
Yeah.
They thought they were covered in Japan because their global managers would take care of it. Well, their global managers weren't there. So I think for a lot of investors now, they're realizing, okay, let's not get too far behind the 8 ball. Let's make sure we have some exposure.
Okay. You mentioned about the number one question is the U.S. election.
Right.
In particular, what were they? Is it just like what happens if Trump wins? What does it mean for China? I mean, what are some of the questions that you're fielding now, too?
Well, it's interesting. Outside the U.S., the presumption seems to be that Trump is going to win. And by the way, I look at a range of different forecasts, and even this morning there was a new forecast that came out and said that they had Biden ahead of Trump by 1% in their kind of survey of polls. So my key message to investors is it's too early to call this election, and I think voter turnout is going to be the pivotal issues. And by the way, turnout is always critical, clearly. For Biden, there's a turnout issue around age and enthusiasm. Also, the Palestinian situation is really hurting Biden with Arab American voters and young voters who are much more sympathetic to the Palestinians. But for Trump, his biggest risk is between now and November 5th. He's almost certainly going to lock in the nomination as the Republican candidate, probably this month. But if he's convicted of any number of crimes before November 5th, as many as 25% of Republican voters have said they will not support him if he's convicted of crimes. And a majority of the voters in all of the 6 swing states have said they will not support him if he's convicted of crimes. So Trump's got a criminal indictment issue, Biden's got an enthusiasm issue. I think it's too early. And then where it really comes down to on policy is trade policy is probably the most consequential of stocks.
Yeah.
With Trump basically promising a 10% tariff on all imports into the U.S. and up to 60% on imports from China. Tax policies are relatively the same. Geopolitics are different, and then we could dig into some sectors that might do better or worse under either candidate.
Right, and the other area where that comes together with markets is, Jay Powell is set up, excuse me, to give his testimony to Congress overnight, and I would imagine the Democrats are going to grill him when he's going to start cutting rates, and certainly the health of the economy going into elections will be critical as well. Your top-line view on what the Fed should be doing and what's probably going to do. Those are two separate things.
Well, I think the Fed is not political. Maybe I'm idealistic, but I really believe they're above the political fray, and there's a lot of risk of becoming politicized, and they don't want that. And I should note one risk of the election, if Trump does win, is that the Fed loses its independence or is perceived to lose that independence. So that's something to keep in mind. What I think the Fed will do and should do are basically the same this year. I think we're going to get 100 basis points of rate cuts. The market is saying we'll get 85 to 90 basis points by the end of the year. I think it ends up being 4 cuts. I think we get another 4 cuts next year. If I'm wrong, the risk is we get fewer cuts in 2025. But what's really important about that is I do not believe the Fed is going to take rates down to 2.5% or 2%. I think the easing cycle will end above 3.
Okay.
And that basically means to me that the long end of the yield curve, the 10-year yield, is probably a little below fair value now. I mean, if the peak of your Fed fund cycle is 5.25 and the trough is 3.25, that implies your average Fed funds are 4.25. I got to get paid a term volatility premium to buy a 10-year bond. We should probably be closer to 5%. So that ties back to the equity market. The U.S. equity market's at 21 times forward earnings. I don't see a lot of upside if you can buy a 10-year Treasury at 5% and an investment-grade corporate at 6% or higher.
But you mentioned, I mean, it seems like the Mag 7 is kind of going against that narrative, right? That no matter what happens with the Fed, you still have this whole AI sort of story that can keep stocks heading forward. What's the other counter argument to that?
Well, if I narrow it down, because the Mag 7 seems to have a couple of dropouts this year in terms of they're no longer performing. But if I look at the AI tech enthusiasm, the earnings growth has been great. They've done a really good job. And there's obviously a crowding in of capital into these tech stocks, into their products and services. Now, my conceptual view is companies are only going to keep pouring money into AI and tech more broadly if they get a return on the investment. And how are you going to see that return on investment? You're going to see it in their earnings growth and in their margins. And so I do believe, I don't know if it's 2024, if it's 2025, we're going to see the benefits of that investment start to broaden out in the market. If we don't see it, the C-suites at those customers are going to say, rein back in that spending. It's not paying off. Let's figure out how to make it pay off. So I think you're going to get a broadening in the market. And when I look at the PE multiples of the Mag 7 or the Fab 5, they're basically pretty full at this point. They've built in a lot of good news, and if discount rates aren't going down materially, it's got to be earnings growth to move them higher.
Just quickly, that sounds like you prefer fixed income over equity markets.
No, actually, to be fair, I do like equities over fixed income. I think, again, you could get a better entry point into fixed income. But my goal in equities is move away from the capitalization-weighted S&P and move to the rest of the market that really hasn't performed. The equal-weighted S&P is at 17 times, not 21. Emerging market equities are at 12.5 times. I mean, so there are a lot of options other than the Mag 7.
Ron, it's great to have you here in the region.
Thank
Ronald
you.
Temple there, Chief Market Strategist at Lazard, joining us here in our Hong Kong studios. We got plenty more ahead. This is Bloomberg.
Right, welcome back. Donald Trump is getting closer to securing the Republican presidential nomination after winning in at least 3 states on Super Tuesday. That's the latest. Let's bring in Jodi Schneider, our political news director, joining us out of D.C. to talk us through this. And I guess, Jodi, Super Tuesday perhaps a little less super than in previous election cycles. No, I guess no pun intended there. But talk to us about the significance of these headlines in the last 5 minutes.
Yeah, so we're seeing what we expected to see, which is Donald Trump doing very well tonight. That there's 874 delegates up for grabs tonight. 36% of the total number that you need to secure the Republican nomination for president, and he's expected to win most of them. We haven't really seen Nikki Haley come out with a big win yet tonight. She would need to do very well tonight to blunt the real just the Donald Trump's race to secure the nomination. After tonight, and Joe Biden is winning in the Democratic primary, we will really see a matchup between these two people in months and months before the general election. So it may be kind of the earliest general election we've had in really a long time in the United States. The question for Nikki Haley, of course, is if she doesn't do well tonight, and as we say, we're not really seeing that, what happens with her campaign? Can she afford to keep going? Will she get donors? And sort of what is the point of going forward if she cannot secure the nomination?
Yep, that's certainly, is this the end of the road? Obviously, is it the last stand for Nikki Haley? I mean, in terms of what we're watching out for tonight, Jodi, even though we know that it might be a Trump and Biden sort of re-election or a sweep here in these primaries, what are we looking for their parties in particular, too?
Yeah, so we're looking at a couple of things. First of all, that enthusiasm, what are we seeing in terms of turnout? What are we seeing in terms of voter enthusiasm? With President Biden, what are we seeing with that uncommitted vote, as they're saying? We saw that in Michigan, about 10% of the balloting, and which he won handily in the Michigan primary, but about 10% of the balloting they listed themselves uncommitted. That was largely over dissatisfaction among Muslim and Arab American voters in the Detroit suburbs over what they saw as Biden's handling of the Israel-Hamas war. But we may see some of that tonight, and that could be a problem for President Biden going forward. The other thing we're looking for is what we call the down ballot races. These are for control of the House and Senate. Both chambers have the very big possibility of flipping control this election season. So we're going to be looking at those races in key states like California and Texas.
Jodi Schneider, our political news director, joining us there on Super Tuesday. In terms of the markets, and we're looking at here today, obviously we're seeing if we're going to see another day of disappointment across these Chinese markets post this work report from the premier. And one of the key words that we saw was, what we saw with that ambitious growth target was the fiscal plans were just insufficient, right? Hang Seng and pre-market is flat this morning. HS Tech slightly to the downside. Robin Xing saying, look, it was supply-centric stimulus. That would impose downside risk on the nominal GDP forecast of 4.3% and extending that danger of debt deflation loop. We have the likes of UBS, Goldman still keeping their forecast for the year, too.
Yeah, they didn't see enough to move in their forecast. And you guys are, by the way, quite lucky because, well, guess what? Robin Xing joins us tomorrow. There we go, out of Morgan Stanley. The Open is next. You're watching The China Show.
Watching The China Show, we're counting down the opens of markets there, and there is a bit of disappointment still across these markets. We're flat when it comes to the Hang Seng. A50 futures are still pointing in the red here this morning. What we were talking about here, still digesting what came out of that work report from the Premier Li Qiang, and we're expecting to hear major briefings coming through here later on today from the PBOC, CSRC, the like, Dave. Yeah,
if I remember correctly, so PBOC, CSRC, Ministry of Commerce, Ministry of Finance, NDRC. So the Avengers of this economy. 10 seconds to the opening bell. As Yvonne is pointing out, massive drop that we had yesterday. You had a drop in U.S. Traded China securities overnight. We're looking at a 50-day moving average in the MSCI China as your next support level. Here's the opening bell for you. Your benchmarks and some of the proxies that we're tracking here across this market. Weakness across the CSI 300. By the way, some support came through in the onshore market yesterday. Was that state funds keeping this market afloat as markets digested? That's certainly the divergence between what happened and the declines we had offshore here in Hong Kong as opposed to the sort of stability that we had onshore. A drop in the vol index. We're still following, and as you can see, this is still continuing. This 10-year yield, in fact, a 30-year yield, can't seem to find a floor at the moment. World-beating bond market rally that we're seeing in China. Flip the boards, please, and glance at your sector groups as well. We'll get more granular as far as some of the other names that we're tracking here are concerned here. Financials leading some of the losses. Financials, though, onshore are seeing some gains right now. Some of the sort of pockets of this equity market that we're tracking. So overnight, in the small chance that you missed it, Bitcoin and gold touching records. We're pulling back from those levels. Gold stocks, as you can see, continuing to see those gains. Bitcoin is a little bit higher. Gold's coming up on your screens in just a moment there. So that's also pulling back from that record high. Made to an OSL, of course, are some of your crypto-related currency, crypto-related equity markets, equity names here in Hong Kong. And this is really a cross-section of your themes for today. NEO's out with earnings. JD.com is coming out with earnings. More NEO in just a moment here. The big drop in tech overnight. AAC Tech, of course, Yvonne, I'll leave you with more on this. Certainly, the Apple story is playing out. This is one of the key suppliers listed here in Hong Kong.
Yeah, when you have reports saying that sales there have plunged 24% in China for Apple, we saw the stock, Apple stock, entered a technical correction for the first time since August this month as well. So certainly the wobbles that we're feeling across the Apple supply chain are being felt here in the region. So AAC Tech, Sunny Optical are both lower here. Goer Tech also down close to 1.5% this morning. We're also watching some of the Tesla suppliers as well. So we look at battery makers like CATL, Ganfeng Lithium, the like, because it wasn't just the Apple story. You're seeing weakness in Tesla when it comes to that Chinese market as well. So CATL, we're seeing that downside about 0.8%. LG Chem, the like, also down some 2% this morning.
Okay, let's talk about NEO. So initial reaction, and a couple of sell-side analysts have come out with their changes. There I think we showed you CLSA, and also I think it was Yuan Ta. In any case, of course, let's get to the numbers right now. So weaker than expected fourth quarter numbers coming through as well. This intense competition we talk about almost day in and day out in the EV market there. The details right now on the NEO earnings. Joining us here on set is Dan Lee, of course, who oversees and looks over, of course, all things transport for us in the region. So top of mind for you.
So it's the first quarter, this quarter coming up, their guidance, it was weaker than expected by quite some margin. They expect to make around 11 billion yuan in revenue, but it's lower than the street's estimate of around 15 billion. And when you look at some of the analysts' reaction this morning, they're all talking about, seeing NEO having a challenge to deliver more vehicles and ramp up production as they go through the year. But when we look at this just past period, this fourth quarter, clearly, it's they did better on revenue, but across the year, they're still losing a lot of money, $2.9 billion US. It's not great, and they've been struggling, which is why they've been trying to raise more money over the period.
And especially when you're seeing rivals like Xpeng Leo are actually making money that we saw in these results as well. What can they do to stem those losses? I mean, they've been focusing on the premium segment. Do they have to shift a little bit more to mass market?
I think this is a really big question when it comes to their focus. Clearly, they're very much prioritizing what they know best. They haven't given much of a clue into maybe shifting a little bit, because their product lineup is very much focused this year on what they do at the best at the moment. But clearly, for one of China's biggest EV upstarts, it's not great, given they've been challenging Tesla in the biggest EV market in the world.
Danny, thank you so much. Danny Lee there, our transport reporter on NEO earnings coming through. 15 buys, 5 holds, 1 sell, as you can see on the stock, although that might have changed with some of the changes that have come through in the last minute or so. Let's talk about Alibaba. Of course, this is a big one. Of course, I think this is the second one for the year so far. So they're going big, certainly on AI. So Baba is said to be spearheading its second major AI deal this year. Sources say it's leading a financing round of at least $600 million for Chinese AI startup Minimax. Let's bring in Edwin Chan, our managing editor for Asia Tech, joining us right now. It's a $2.5 billion valuation.
$2.5 billion, potentially a little more. Yes, it's a big deal. We're only into early March, and we've already seen a couple big deals from Alibaba. I guess it's both surprising and unsurprising. Alibaba's new chieftains, as it were, Zhou Tai and Eddie Wu, are veteran deal makers. So in a way, we should have expected at least a wave of transactions as they try and spur growth at a company that was once one of China's most prolific tech investors. It's surprising in the sense that a lot of the chatter in the market has been how to turn around, for instance, the cloud business, which has been the subject of some controversy. And these AI bets don't seem to have, at least for now, as far as we can tell, kind of a unified purpose to them. I believe the market views this as essentially hedging their bets, betting on the potential future AI leaders without knowing which one is likely to be.
We're flashing some lines that came out with this opinion piece from Eddie Wu. that took the helm from Daniel Zhang and now is chief of the company with Zhou Sai, and really talking about the cusp of a new revolution when it comes to AI. This was published on the Internet Overseer of China, which is quite rare. It seems like it's quite a big endorsement for a CEO.
I think so. I think they rallied. This one got prominent placement on the WeChat account. We were talking about the CAC, the Cyberspace Administration of China, which at one point was one of the stricter regulators during the tech crackdown years, and certainly Alibaba, along with Didi and other firms, were a target. So placing Eddie Wu on their website is perhaps a signal that they, at least for now, endorse what Alibaba seems to be doing, which is investing in one of Xi Jinping's key initiatives, AI and cutting-edge scientific innovation.
What I was about to say, this seems to be a broader priority from Beijing anyway, and at least the regulatory tailwind for Baba and maybe others that might soon come out with their own bets is really behind this theme, isn't it?
It could be. I mean, Chinese tech companies, not just Alibaba, have over the past 2 years learned their lesson. I think they take their cues very much from the central government now. AI in general is both a good commercial and political opportunity because it's potentially transformative. It's a chance to get in on the ground floor and perhaps make something out of it and match the U.S.
All right. Edwin, thank you. Edwin Shen there, our managing editor for Asia Tech, on the second deal Alibaba has secured when it comes to this whole AI race here. It really seems to be faster than some of their rivals out there. In terms of Asia Tech here, this is what we're seeing. We're seeing about 18 stocks up, 10 down here this morning. And so it's a bit of a mixed picture, but JD is definitely top of mind and the outperformer. We're seeing that stock up 4.5% as we count down to those earnings a little bit later on.
Yep, there we go. And the opposite is true. Certainly we talked about Nia and Li Auto, of course, which got that big boost following its surprise earnings coming through, some money being taken off the table as far as that's concerned. 12 points to the upside on HS Tech. There's plenty more ahead. This is Bloomberg.
The trading has been, by all terms, historic.
We've gotten to very frothy levels.
I do still think, despite, the suggestions that there could be a bear case, it's difficult to really hone in on that bear case when the facts, I think, are so blaringly obvious in favor of a bullish case.
Net new buyers drive more adoption and market cycles. And I think the question to ask is, who are the net new buyers in this cycle? And the net new buyers is the global financial system.
What we're seeing is these green shoots of demand are emerging, a lot of retail coming in, the trades are on the smaller side, and I think we're really yet to see what this untapped demand will look like once these ETFs are offered on more platforms.
I wouldn't be surprised to see some correction and some consolidation, but I'm very loath to pick a Bitcoin high because I really do believe this is price discovery.
It's competing against the S&P index. It's competing against real estate, $100 trillion plus asset class as a store of value. So we believe capital is going to keep flowing from those asset classes into Bitcoin because Bitcoin is technically superior to those asset classes.
There you go. Perhaps arguably the top talking point across markets these last 24 hours. Some of our guests are on the outlook for Bitcoin, which, as we were just mentioning in many more ways than one, reached a record high, first time in more than 2 years. But here's the thing. On the day it hit that record high, gold also did so. It certainly won for both bugs, so you don't have to quarrel, really. But when you look at sort of flows and ETF flows, it suggests that investors appear to be more confident in the cryptocurrency. According to Bloomberg Intelligence, the top 10 or the 10 U.S. Bitcoin ETFs that started trading in January have seen about $8 billion of inflows, the most successful launch ever of investment products. Meanwhile, the opposite is true, 4.6 billion outflows out of gold ETFs.
Yeah, quite a divergence there. So maybe more So digital gold versus actual gold right now. Let's get to our Asia finance reporter, Suvashree Ghosh, joining us out of Singapore. Let's focus more on digital gold right now, because we hit those all-time highs, but we didn't stay there for too long, Suvashree. We're seeing quite a bit of retreat here right now. What are the risks ahead for Bitcoin?
Thank you, Yvonne. Exactly as you rightly said, there are a lot of, interest in digital gold as well. But what we are seeing in terms of risks for Bitcoin panning out are in the liquidation numbers. Like, for example, in the last 24 hours, we have seen total liquidations overall in the market being $1 billion, which was the highest since the last bull run in 2021. This actually shows the kind of buildup of froth that we saw in the last 3 months in this year so far, when Bitcoin rallied by 60% this year. So we could see some more profit taking, given that the correction has already started and people are now booking profits. So there could be some profit taking going ahead, but again, the risks continue to stay limited because the demand, as you were rightly saying, and David was also talking about it a little bit earlier in the show, about the ETF demand coming up. So yes, some kind of unwinding, a little bit more expected, but downsides look like limited.
Okay, so when we hit that record high, my feed was flooded, and they've all come out of the woodwork again. 1 million in Bitcoin. Are we looking at that next, or is it closer to 50,000?
It's a very difficult question. It's literally $1 million question. But David, I think as of now, people are traders are building up for expecting pricing in a little bit lower on the side of 50s, late or mid 50s. And then some kind of range-bound trading, and again you have the halving, which is where you will see supply again tightening for Bitcoin, and then of course the Bitcoin ETF, the spot Bitcoin ETF. So all of this will maybe take it closer to another record high. I don't know about $1 million, but yes, another record high could be possible. As of now, it looks like a range-bound market.
Well, the options market suggests, though, that when you look at where the most call contracts are coming in, it's really north of 70,000, 70, 75, and 80. Do you think that's a good reflection of where the market thinks actually Bitcoin would be, perhaps over the shorter term?
It does. You are right. The options, the open interest in the Bitcoin perpetual futures have reached a record high, and they, as you're rightly saying, are pointing to 75K number. Of course, there has been some kind of unwinding of those long positions, but even then, it still continues to kind of trend and kind of look at that kind of levels that you just mentioned. Yes, but short term, we don't know. It could be slightly in the next few months or next few weeks. It's a very volatile asset, as we all know, so that we have to watch out for.
Suvashree, thank you. Suvashree Ghosh, there, our Asia finance reporter, joining us out of Singapore. We're checking these markets across Greater China here this morning, and once again, that divergence that you're seeing between onshore and offshore are playing out, with Shanghai lower by about 31% for your CSI 300. We're still well above that 3,500 level. The Hang Seng is slightly up. We're also watching MSCI China very closely right now, Dave.
Yeah, because since we hit our head on the 100-day moving average, it's since retraced all the way down. In fact, the drop that we had yesterday, and we'll see whether the support level holds, is we're now at the 50-day moving average, right? So the rally that's taken place from late January has taken us up about 12%. In fact, that was about the time that Goldman Sachs came out and said 16% from that point. We've since gone 12% up, 2% down. Next level to watch is that purple line you see on your screens. All right, there's plenty more ahead, and so yeah, we'll be taking a look at what's trending on social media and in papers in China. This is Bloomberg.
look at some global headlines now. The U.S. says it supports the Philippines in the South China Sea and has condemned China's acts against Philippine ships in the region. As after vessels from both sides collided in the disputed waters on Tuesday during a Philippine military resupply operation. The last time a similar incident occurred was back in October. The UK Chancellor of the Exchequer, Jeremy Hunt, has told the BBC his budget will be prudent as he looks to temper hopes within his party for significant tax cuts. Bloomberg has learned that Hunt is set to cut 2 percentage points off the national insurance payroll tax in a bid to give his Conservative Party a poll boost. Sources say Hunt and Prime Minister Rishi Sunak are still weighing how far they can go with tax cuts. Israel is selling $8 billion of international bonds, its biggest sale of dollar notes on record. It's also the first such transaction in public markets since the war with Hamas began 5 months ago. The government has launched a 3-part offering of notes due in 5, 10, and 30 years. Sources say the sale reeled in at least $34 billion worth of investor demand.
Let's get to your China brief for the day and a look at some of the stories making headlines and beneath the headlines in local Chinese papers and also separately trending on social media. Let's start with the papers first and foremost here. So certainly the Securities Times is reporting that several NPC deputies are calling for this revision of the PBOC law, which I believe was last revised 21 years ago in 2003. Now, they say things like inspections, supervision, regulatory measures related to the central bank must be improved. Meanwhile, when we look at the Shanghai Securities Journal here, it says that the chairman of EV battery maker CATL, Zheng Yuchun, has submitted proposals here on integrating batteries in power grids as well as the electrification of heavy trucks. Now, Zheng says as the number of EVs increases, it would aggravate the load on electricity grids.
Yep, and the topic of EVs is also making waves when it comes to Weibo. Now, they're part of that series of buzzwords, right, that were brought up during the 2 sessions. The new trio is what they're calling it. So it's an umbrella term. So think about EV, lithium batteries, and photovoltaic products. I hope I'm saying that right.
Oh, fancy
There's other
word.
new phrases include ultra-long special bonds. We heard that certainly when it came to that fiscal budget. And AI Plus, this new initiative. Meanwhile, the NPC deputy has sparked debate on Weibo as well after suggesting that college graduates should not limit their job search to just first-tier cities, and that includes places like Shanghai and Beijing. Rather, he says, think about other cities, new first-tier cities. Chengdu and Chongqing, Dave. Lots of opportunities there, apparently.
Yeah, outside the traditional first-tier cities of Beijing, Shanghai, Guangzhou, and Shenzhen. So
Yeah.
maybe look at the other big metropolises, right? Like, and I think the context here too, and you know, when you look at the internet commentary coming through, not so convinced. You know, some have pointed out that wages in and some of the third-tier, non-first-tier cities don't match at all. And
Yeah.
it goes into, we talk about these top-line numbers a lot, right? I think yesterday was 11.5 million college graduates are hitting this economy this year. And will there be enough jobs?
Yeah.
Across the places where those graduates are coming out of school.
And when they're hitting targets like 12 million jobs, urban jobs to be added, I mean, that certainly is the one that we're watching here. When you are starting to see those unemployment figures for youth unemployment, now they've been republished again with new metrics. They're slightly better, but not quite there to
They're
tell.
still in the 20%.
They're still bad.
Yeah.
They're still double digits when it comes to what we're seeing there. So maybe it is time to venture out beyond just the big cities there to really look for a job. But yeah, as they say, maybe the opportunities are a little bit more scarce.
That takes us into, well, I guess the big one, the next big event as far as Chinese markets are concerned. So we're just, 30 minutes into the session right now. At about the close onshore today, 3 p.m., is when you'll get at least as far as the agenda goes, that's when that big press briefing begins. So it's PBOC, NDRC, Ministry of Commerce, Ministry of Finance.
CSRC.
NDRC, yeah. Everybody.
Everybody.
Yeah. So that the headline of it's the growth target without a plan.
Yeah.
We might get that plan later today.
Hopefully.
Yeah.
I mean, it seems like that's what the markets are yearning for still, right? That, yes, it's an ambitious growth target, but it seems like the numbers, as Julie Wren, our Bloomberg opinion columnist, said, are fuzzy in the fiscal side to really deliver that 5% growth. And even Morgan Stanley was crunching the numbers. If you talk about the aggregate, they're still talking about, 11.9% of GDP for that fiscal budget which is basically the same as the previous year, according to Robin Shing. So still, we could be still talking about a debt deflation loop that Robin Shing has been talking about. In terms of what we're watching out for, Jay Powell's testimony, that's coming up on Thursday as well. You're seeing yields pick up just slightly in the short end with the 5-year up about 1 basis points, but we're still talking about a 4.16 for your U.S. 10-year yield. Pretty stable here this morning. Japanese banks, though, have been moving. It was interesting what we heard from Japan's largest bank, Mitsubishi UFJ. They are readying liftoff for BOJ
March or
this
April?
month. March, they're saying.
It is March.
Yeah.
Oh, I forgot about
We're
that.
just a couple weeks.
Yeah.
And they're putting the odds at about 50%. And it's not just March. They're saying maybe by October we could see another hike there to take that policy rate to 0.25%. But they need to secure future policy flexibility. That's their view.
Okay. Yeah, well, it does bring to mind the comment coming through recently from one BOJ official that the price target is really starting to come.
Yeah.
And if you hence why we're talking about March, if not March, April, if not either or, maybe both. In any case, the next 2 BOJ meetings, as far as markets go, are live. Markets looking like this, and some headlines coming through here, of course. And speaking of Super Tuesday, a headline coming through here.
Yep, so we're continuing to see more. So with former President Donald Trump winning the Massachusetts Republican primary, and that is, according to what the networks are saying, another state you add with a nomination with North Carolina, Virginia, Tennessee, that were added this hour alone. We have plenty more of our special coverage of Super Tuesday with Joe Matthew and Kelly Lyons next. That's it from us here at The China Show.